everyone, John Henry here, slingshotfutures.com, and welcome to the daily market outlook for futures and Forex? Wait a minute, where did the charts go? We'll talk about that in a little bit here with the big fiasco over at FXCM. But all of that said, we're going to be focusing on the big four markets this time around. We're going to be looking at gold, crude, the ultra bonds, and the E-mini Dow. And we're going to be looking to formulate in a plan and an attack method for tomorrow's trading so we can be as prepared as possible. Now, before we jump into all the fun stuff, always make sure, swing on over to slingshotfutures.com, scroll down a little bit towards the bottom there, and click on the Join the Daily Outlook newsletter if you haven't already. That will add you to our mailing list, and you'll know every single time something new comes out, and you'll be notified via email whenever the Daily Outlook goes out or anything big is happening. So definitely a good list to find yourself on, and along with that, every single morning, make sure to swing on over and take a look at the morning prep levels. We post them every single morning. It's going to be for the big four going forward, and that's going to cover all of the major support and resistance levels that we're looking to trade around and with. So overall, one big piece of news that we had was that the FXCM company, if you're not familiar with them, they are a publicly traded, actually, Forex brokerage. FXCM is banned by the CFTC after taking positions against clients. Now, that was loaded up on all kinds of different news sources. This one just happens to be from MarketWatch. Very interesting overall movement in the way that they were going about it. Now, I'm not going to get into the fundamentals or anything like that. If you have an FXCM account, maybe be a little bit careful. It's your choice what you want to do with it. I know that we were talking quite a bit extensively today on FXCM and its stock prices and what all was going on, so definitely something to keep an eye on. Now, if we take a look at the FXCM chart for today, just looking at a 5-minute chart, nothing fancy, we can see that FXCM got obliterated, right? We closed yesterday almost near the $7 mark. We opened up this morning at around the $3.40 area. So absolutely destroyed on that news. Now, that news today overall, we really didn't get much more than a range on FXCM. And the reason I'm bringing it up in the first place is simply just because I want to keep an eye on it. If FXCM is going to try to, settle this or do something, we could have a lot of movement on FXCM in the next few days. So I'm keeping an eye on this right now. They started off with a nice bullish spike in the morning and then just completely fell right back down on themselves back to a new low. And that's kind of where they stayed. So mostly a range day overall, but definitely hard to ignore the fact that it closed yesterday up in the 683.84 area and dropped with an open all the way down at $3.40. Yeah, might make a little people concerned. So just keep an eye on that. It could get a little bit interesting the longer this goes on. So I will be keeping an eye on FXCM personally. And it might be something to keep on the back burner for you as well. Now, jumping over to the futures markets, we have gold locked and loaded up with a range. Now, overall, gold arguably looked pretty good today to start the day off, right? We kicked the day off at 820. We had a nice bearish drop, very strong bear bar as the first candle of the day. Remember, the ET8 session, none of this was there. Very strong bear move down. Nice continuation, and it completely fell apart. Now, that fall apart, they found a new low underneath the low that formed at around 645, and they found a small little bull bar. Now, that small bullishness that we saw there was compounded with a big move up as continuation, and that's showing that, well, even though it wasn't very probable that the buyers take this, it's beginning to look like the buyers have a pretty good argument here, and they start slamming higher. Now, once they pushed back above that high, that kind of sealed the deal, and you can see the rest of the sellers likely gave up above that with that huge bull candle. But when they started to really kick off to the upside, all they managed to do was come back up into a huge area of inventory between 36.9 and 37.5, and then fade right back off it again. So we're finding ourselves in a little bit of a range, and it's a multi-tiered range. We can see the range down here, and we can see a pretty obvious range up here. So generally speaking, whenever you have a multi-tiered range, two different ranges kind of working off of one another, usually you can trade both relatively reliably, right? You're looking for a fade off of the bottom, sell off the highs, etc. And when it breaks down, you're looking to buy low, sell high, and it goes kind of continuing over and over and over again. So that's sort of what you're looking to do with this type of scenario. One thing to always keep in mind is when you're looking at a multi-tiered range, if it fails to get to one side of the range, it's sort of like there's a big weight at the bottom or the top of it that sucks the price down to the next area. And notice that we failed to make a new high above that 1237.5. It's a pretty big clue, because if the sellers do start taking over, we could be in for a move back down into the lower bracket of the range to see what they want to do there. Overall, generally speaking, we're looking to buy low and sell high out of both of the ranges, looking to buy low in the top range and buy low in the secondary range, and sell high is discretionary. It could be at the highs or it could be at this midpoint here at around 33.4. Right now, we're just kind of hanging out in the middle. Not really much to do here until we get a little more movement. It does appear as though with that miss on the top, the bears have a better probability to try to push down, but it all remains to be seen on what they want to do. So looking to buy low, sell high, and stay out of the middle. Over on the Ultra bonds, big move up on the Ultra T-notes. That run higher, same thing, right? We opened up the morning session 820, big bear spike lower, decent continuation, or at least it looked like it, and then just completely shut down right back in the opposite direction. So now with that massive run to the upside, we have a huge area of support at 161.13. And really, you know, the way that this is setting up with such a huge move higher, we're getting somewhat of a kind of a little spike down and then a small little channel. And a lot of times when you get that type of formation, it can lead to one of two things. Either the market's going to pop higher and then continue back to the downside, or they're going to overexert themselves to the downside and get all of the sellers out of the way into major support and then rocket right back up to a new high. Now, based on the overall upward swing that we had going on here in the morning session, I would much rather see them push down into that 161.13 area and then look for buying pressure back up to the highs. Now, because this was so aggressively bullish, and depending on how long-lived this pullback is, by the time we get back to the highs, we may only be looking for a retest of the high as a double top, maybe even a slightly lower high, looking at that small little swing from before. Notice the twin reversal back there. That area could be a pretty big area of interest / concern, depending on what side of the market you're on. So just kind of keeping an eye on this, wanting to buy a little bit lower though. I would like to see the pullback go a little further down, 161.13 at the very least, if not a little bit further down before looking for the high a day again. Over on crude oil, beautiful bearish trend today. Now, if you were trading this US session morning, you won't be saying that, right? The morning session was very, very slow. We started off with a beautiful drop down. And much like yesterday, we just ended up going nowhere for a good 2 hours before we finally got the breakout move to the downside. Now, you know, if you were sitting along with me in the room today, we were short into crude and we waited for a very long time for that thing to finally let loose. And once it did, it became a nice, easy move down. But man, oh man, patience sure paid off. It reminds us of for all you members, that Bruce Lee quote that we always talk about. So the overall momentum that we have is obviously bearish. One key element here, though, is that the bears missed their major objective target at 51.80. And with that miss of the objective on the downside, that does show us that if the buyers do want to take this, they may have a little bit of more emphasis to the upside than they may be leading to. Now, notice this was a spiking channel to the upside. We are breaking above it. Generally speaking, that is exhaustive type movement. You don't see that kind of movement sustain itself. It's too much most of the time. Now, we are also in an area of resistance between 52.29 up to 37, and I would really love to see them come back and challenge this double top again at 37. That would be a nice area for a possible trap high. See the buyers maybe head fake above it a little bit and then dump right back down to the lows. So that's kind of what I'm looking for at the moment on crude. I would much rather still be a seller. Trying to sell early may be detrimental though, so be very careful and wait for the sellers to prove it, especially with this big miss down here at 51.80. If we can't get things going to the downside sooner than later, we may have a fairly large correction all the way back up. And then finally, wrapping up on the Dow with that bright green 20,000 level that hasn't seemed to go away. We're finding support off of the bottom of a wedge, very strong support that was put in yesterday afternoon, going on 10:30 or so at night, and then tested it again at 2 o'clock, and then again at a little after 3, around 3:30, and then it took forever until it came back, but when it came back at around 1 o'clock in the afternoon today, we found another bounce there, and a secondary bounce, and now they're bouncing there again. This is an obvious level. Even if it does break down and turns into resistance, this is a level that we need to keep our eyes on. The fact that it's acting so strongly, even after that amount of time has passed, remember, we're looking at intraday charts, 5-minute charts, and the fact that it's still held that long shows us that the buyers may turn into sellers pretty darn quick if that starts breaking down. Now, off of the top edge, we do have a wedge forming with major inventory between 20,000, there we go, a little weird text there, 20,086 down to 20,073. Big failure off of the highs into that push down. If the market does make it back up there, which it doesn't look like it will at the moment, that would be a nice sell potential area. What I would really like to see, though, at this point in time, is see us break above this falling area of resistance, come back, bounce off that level again, and then make a run back up towards the highs. That is scenario 1. Scenario 2 would be breaking below this area of rising support, concise, right? Very obvious breakdown. You don't want to see a small little thing like this. We need an obvious breakdown. So you get a breakdown of it, they pull back to it as resistance and find an opportunity to sell, instead looking for a new low. So we have kind of both edges of the sword. It all depends on how the market wants to respond to this. And until we get out of this falling resistance area, and until we start either breaking this rising support or holding it, we're going to have to kind of sit on hands. I would much rather be a buyer, especially while we're above the 20,000 mark, but the market can do kind of whatever the market wants to do. So that's going to be it for today. All of the futures markets wrapped up. As always, like we always say, make sure to make that plan, trade the plan, follow those rules, and you will be A-OK. Until tomorrow, keep an eye on that FXCM along with everything else, and we will see you all tomorrow for our crude oil inventory day.